Everyone tells you options are risky. The truth? Some of the safest trades in the market are option strategies, if you know which ones to use. In fact, people think options are all about taking big risks. But the truth is, the smart traders focus on defense first. By controlling risk, they unlock consistent returns. Today, we're breaking down 3 of the lowest risk option strategies that can help you generate steady income while keeping risk under control. When we say low risk, we have a specific definition in mind. To us, a low-risk option strategy is one where both potential losses are limited and the probability of success is high. There are ways to build zero-risk strategies, but that's a whole different topic, and we'll cover it in another video. What we're focusing on today are strategies that give you limited risk and high odds of success. Let's start with the short call spread, also known as a bear call spread. This is a strategy for when you expect a stock to stay flat or drift slightly lower. Here's the setup. You sell a call option at a lower strike, and you buy another call option at a higher strike. Why do this instead of just selling a call? Because by buying that higher strike call, you cap your maximum loss. In order to do this, you give up the possibility of having a larger profit if the underlying stock moves down, meaning you reduce the money you could make if you are right. Let's compare this payoff with that of a naked call. If you are selling a call, your capped profit will be higher compared to selling a call spread. If things go wrong, however, your naked call will have uncapped losses, while the spread has a built-in stop loss here. You could say that having a lower capped profit is the price you have to pay to limit your losses with a short call spread versus a naked call. Let's see how you can find a trade like this using the Samurai platform. We'll start in the predefined scan section. You'll notice there are lots of available tags here. Just click the one labeled Bear Call Spread to get started. From here, several predefined scans appear. Let's pick this one. Sell OTM call spreads. Margin of safety, positive expected value. What this scan does is simple. It looks for call spreads above the current stock price with positive expected value, at least a 30% return on risk, and more than 2 times the average true range as margin of safety. You can use this scan as it is, or you can tweak it. For example, if you're not comfortable with having a maximum loss of up to $1,000, here's what you can do. Click the duplicate button above. This way, you can create your own copy of this scan and edit it as you wish in the future. Just give it a cool name. Then, go to the max loss filter and set it to below $500. Finally, click Run Scan and Update. And that's it. Now, every result in this scan fits your exact criteria, and you can rerun your scan whenever you want. Now, let's flip it around with the short put spread, also called a bull put spread. This is a strategy for when you expect a stock to stay steady or climb a bit higher. Here's the setup. You sell a put option at a higher strike, and you buy another put option at a lower strike. The question you may ask here is, why not just sell a naked put? Because by buying the lower strike put, you cap your maximum loss. In exchange, you reduce the profit you can make. As you can see, the strategy will look like a mirrored version of selling a call spread. Notice that you don't need to scan for it manually. Samurai will take care of it for you, as we will show in a few seconds. Let's compare this payoff with that of a naked put. As you can see, when you simply sell a put, your capped profit will be higher compared to the spread we have just showed you. However, your loss risk is unlimited, whereas the spread is putting a cap to it. Now, let's see how you can find a bull put spread using the Samurai platform. We'll start again in the predefined scan section. This time, click on the tag labeled Bull Put Spread. Several scans appear, and let's choose this one. Sell Oversold Bull Put Spreads. Notice how this time the entry trigger is different. It's based on oversold conditions using a technical indicator. Earlier, we looked at margin of safety, and that's the power of Samurai. With hundreds of filters available, you can build scans around the triggers that matter most to you. Specifically, the scan looks to sell put spreads below the current stock price, focusing on companies that are oversold using the RSI indicator. We filter for a probability of profit above 70%, a return on risk of more than 10%, and then sort by the highest expected value of the spread. Now, let's say you want to adjust this. Maybe instead of a 10% return on risk, you want trades that give you more than 30%. Easy. Just click the duplicate button to create your own version. Rename it something like My Bull Put Spread. Then go to the filter for spread profit ratio. Change it to above 30% and hit Run Scan. Once the results load, click Update to save your custom scan. And that's it. Now, every trade that comes up will match your stricter profit criteria. Finally, let's talk about the collar strategy. This one is different because it's generally used with stocks you own. The idea is that adding 2 options to your 100 shares will cap your loss risk at the cost of setting a limit to your profit potential. Here's how it works. Suppose you bought 100 shares at $103. You could buy a put option at $90 to protect against losses. Sell a call option at $110 to pay for a part of that protection. Of course, the trade-off is that your upside is capped if the stock rallies too far. But for investors who want protection plus income, this is one of the lowest risk ways to play. And if you thought that was safe, wait until you see this. A cool thing to know here is that you can actually set up the collar strategy to have a zero-loss risk trade. This is no trick. In the worst-case scenario, you'll earn less than a short-term government bond, but in the best case, you walk away with a much higher return. We're going to cover this exact setup in a full step-by-step video very soon. So if you don't want to miss it, make sure you hit the like button right now, subscribe to the channel, and tap the notification bell. That way, YouTube will let you know the moment we drop it. Alright, let's now go back to the classic collar strategy. Here's how you can scan the market for a collar on Samurai. This time, to better show you how our platform works, we won't start from predefined scans. Instead, click Compose New Scan. From the drop-down menu, select Collar. Then set a name for your scan, like My Collar Scan. At this point, you'll see a set of predefined filters we've already built for the collar strategy, but you can easily adjust them to fit your style. For example, if you want to limit your search to stronger companies, set both Stock Score Fundamental and Stock Score Growth to above 7. Once you're done, click Run Scan and then Save. And just like that, you've created your own personalized collar scan. So which one's right for you? If you want income without owning the stock, go with call spreads or put spreads. If you already own stock and want protection, try the collar. Each strategy defines your risk up front and tilts the odds in your favor. Just as we showed you, we offer an advanced tool to find all these strategies and more. Samurai scans millions of options in seconds. Sign up for a 14 days free trial. Option Samurai. Find your edge now. And if you're serious about improving your options trading, click this video to take the next step.